Tax deductions can be a great way to save money when filing season comes around, but you may not have a clear idea how they really work, especially if someone else prepares your tax returns for you. Maybe you've never itemized your deductions because you don't know whether you would save more money than by just taking the standard deduction. However, you may feel about deductions, it's important to examine the fundamentals, and that's just what we are going to do today. What's up, my people? It's Kiwanis, your credit and tax advisor. Today, we are talking about the role of tax deductions. Now that Christmas is over, it's a great time to prepare for tax season. If you need a tax preparation checklist, check out the description. I have linked a free checklist there for you. Make sure you subscribe to my channel so that you don't miss any videos. Also, if you have questions, drop them in the comments. Let's get into today's video. So when you hear the word deduction, just think subtraction. You're simply subtracting how much of your income is taxed and reducing how much you owe to the IRS. For example, so say you give to a charity, which is one of the most common deductions. That means you could write off the money you gave to that charity last year and reduce your taxable income by that amount that you gave. So let's say your income is, let's do some round numbers, 50,000, and you gave 1,000 as a gift to your favorite charity. You could claim that gift as a tax deduction, and you would only be taxed on $49,000 instead of the $50,000. So how do tax deductions really work? When you're filling out your tax return, there are two ways to claim tax deductions. Take the standard deduction or the itemized deduction. You only can pick one. The standard deduction is an amount set by the IRS each year, and it's an easy option. It's like an automatic tax freebie. If you choose to take the standard deduction, your taxable income is automatically reduced by a set amount based on how you file. So that's based on if you file single, married filing jointly, married filing separately, head of household, qualifying widower. The lower the amount of tax you have to pay, there's no need to dig through receipts or bank statements to find your deductions. So that is a standard deduction. Now, itemizing your deductions take a little more work. You'll need to list out all the deductions that you want to claim, and you have to do it one by one. And then you'll have to fill out a Schedule A form with your tax return and save your records to back up your claim. I have two videos on standard and itemizing deductions that you can go take a look at after you finish this video. So for the 2022 tax year, the standard deduction has been adjusted slightly for inflation. So if you're single, the standard deduction is now $12,950. Married and filing together, your standard deduction is $25,900. It's important to note here, if you or your spouse are over the age of 65 or legally blind, you might be able to get a larger standard deduction. But if you are a non-resident alien or a dual status alien, or someone else can claim you as a dependent on their return, now your standard deduction may be lower. Some of the most common deductions that many taxpayers take advantage of are charitable donations, medical expenses, state and local taxes, student loan interest, your mortgage interest, retirement and investing, and then home office deduction. So here's the deal. With the big increase in the standard deduction, taking the automatic deduction will make sense for more taxpayers than before. But it's still important to add up your itemized deductions before you make that decision. Now, I hope you understand a little more about how tax deductions work and the role that they play. Make sure that you hit that notification bell so that you don't miss any of our upcoming videos. Leave all your questions in the comments so that I can respond to them. Until next week, be safe.